Good afternoon, everyone. Very excited to have Jim O'Neill with us today. Just a brief bio on Jim. I don't think he needs much introduction, but let's do a brief bio for those of you who joined us. Jim is a member of the House of Lords, and in July 2018, Lord O'Neill became chair of Chatham House, the international think tank. And Jim is an honorary professor of economics at Manchester United, Manchester University, not United.
No, I like that. The Manchester United one's good.
Exactly, it's in my mind. Jim, creator of the acronym BRIC, worked from Goldman Sachs since 1995 until April 2013, and he was chief economist and vice chairman of Goldman Sachs Asset Management. Jim is a long-term friend of the family office, and welcome, Jim, for today's talk.
My pleasure. Thank you very much for asking me. It's a great pleasure and honor. Nice to be with you.
Great. So we will just have a few conversation topics
Sure.
we'll discuss. We definitely want to have the audience ask any questions they would like. So there is a chat box. Please use the opportunity to ask any question for Jim. We're going to be spending around half an hour to 45 minutes for this chat. Um, let's start with a topic that everybody's looking at. The NASDAQ is at all-time high.
Yeah.
S&P was up 20% the past quarter, Jim. So has the market taken the vaccine?
Listen, I always start any answer these days about the financial markets by saying it's over 7 years since I left the active world of finance. And I'm not following it all hour by hour, minute by minute, day by day. So now I have an excuse for saying I have no idea. But with that sort of cautionary comment, let me also add perhaps some controversial comments. I've been joking with some old trading friends of mine that I should have been a prop trader during this crisis, because contrary to what I read and hear from many other people, some of them incredibly successful investors of the past 30 years and longer, I think the way the markets have behaved has actually been pretty logical. You know, if you go, let me give you reference to a day, the third Saturday in January, the last day of Davos.
Mhm.
And I was hosting at Chatham House the current US Treasury Secretary on his way back from Davos. And towards the end, I joked and said that it seems to me that, as usual, Davos is probably going to be a very good reverse indicator, because the whole mood was about climate change. And in fact, he got himself into some trouble by some things that he said there, if you recall. And I said, here we are on the Saturday when it's just finishing, and I suspect the only topic that is going to matter in coming weeks is COVID-19. And I was the first person to mention that topic that day in a room full of over 300 very well-informed people. And of course, it was because many people just thought it was an issue to do with China. And between that day and the last week, the third week of March, we all know what happened, and equity markets collapsed. And that seemed to me to be pretty obvious, as was the 20% type drop in economic indicators we've seen virtually everywhere, because everybody's done a version of what China did. However, it was equally clear to me that by the end of March, you could see that the countries that were more serious about doing things to get it under control were slowing the rate of infection. And you could also see remarkable evidence, even then, of cooperation going on between pharmaceutical companies and biotechs. And, you know, cutting my answer short, everything that's happened since has essentially reflected that. And of course, there's all sorts of issues about valuation and market dominance and the quality of modern capitalism and society. But by and large, I think the markets have been reasonably logical. And if you really look at various markets together, it is the biotechs and the big technology leaders, for example, what you and I are doing right here, that have led this market. So I read and hear a lot of people saying how crazy and how divorced from reality it is, but I'm not sure that that's true. Especially, finally, very briefly, if I bring in something that probably is being published today, something I've written. If you look at all the classical coincident economic indicators, it's quite conceivable that we are in the early days of experiencing some kind of V-shaped recovery. It might not last into the long term, but it seems to me that we are recovering more quickly than I see many commentators talking about.
And Jim, I think it's definitely we're seeing a V-shaped recovery in the market.
Yes.
And Q3, Q4 is going to be very much around the economy. We're already seeing leading indicators. But I want to touch on a topic that a few on the call might know of your involvement in the field of medicine.
Yes.
And I think you have done extensive work with the Prime Minister Cameron to analyze the global problem of rising drug-resistant infections.
Yes.
So you have more insight, not only economics, but in the field of medicine. I would love to hear your insight on COVID-19. Since it started, really, because you were one of the first to talk about it, and whether a vaccine is in the making, and what's your view on that as well. So we'd love to hear that part.
So I could spend all day talking about this, and indeed, a few people on the call will know about my experience in this area, but many people on the call may be surprised. But it's probably actually the most interesting thing I've ever done in my professional career. And in late 2014, I was asked, completely out of the blue. I could not pronounce the phrase antimicrobial resistance. It took me about 2 weeks to be able to pronounce it after saying it every day. But I was asked to lead this independent review into this topic, which only a few specialist people knew about. And as I say, I found it fascinating, partly because of its importance, but because it was just so complex and a wholly new area coming about 18 months after I'd retired from Goldman. And I'll try to be brief. I'll say for now, I could talk a lot about it, but I'll say 3 or 4 quick things. First of all, it taught me that the world that I came from of economics and finance, hardly anybody thought about these issues. And one of the reasons I was asked is because Cameron's advisors thought I might be able to influence economic policymakers around the world to not just treat this as a health problem, but something that would be relevant for economics and finance. And in a way, even though my review received enormous attention all over the world, and I was very pleased about it, to some degree, we failed, because if we would have succeeded, the world would have been better prepared for this pandemic, even though this is a viral disease as opposed to an antibiotic one. Second thing to say is that it's therefore made it very clear that you cannot separate economics and finance. And one of the clear lessons that I think now seems obvious, and I hope it is, coming out of this crisis, is that all over the world, countries are going to have to treat the quality of their health systems and the ability to prepare for unknown pandemics, whether they be viral or antibiotic, in the future, because we will have more. And in that regard, I'm spending quite a bit of time trying to persuade the IMF that they should put an analysis of countries' health systems as part of their annual so-called Article 4 series for looking at the robustness of member countries. Third thing to say, linked to this, if I look at indicators of economic sustainable development, which I did in the early noughties at Goldman, we created our own for 180 countries. What is interesting is if you look at the top 10 countries on those kind of indicators, as well as the ones that have coped best with this pandemic, they are basically the same countries with 1 or 2 exceptions. So North Korea much of Scandinavia, with the exception of Sweden because of the peculiar stance it's taken, and Northern Europe are countries that typically score the highest. And in that sense, how the UK and the US have performed, which is obviously quite disappointing, actually doesn't surprise me.
Mhm.
And the final thing to say in that regard is, and as I say, I could talk a lot more about so many parts of this, is I think the lesson is that the world is going to have to think a bit differently about its economic model coming out of this crisis on a structural basis than it did before. And perhaps this just-in-time inventory kind of model, particularly as it relates to health, is just now a thing of history. And we will have to spend more public resources on solving market failures, as well as being prepared for extra special risks that could come at any point in time, which is going to cost our societies more, but it might ultimately help our productivity.
Very interesting. Any thoughts on the progress toward the vaccine?
Oh, sorry, on the vaccine. So this is very interesting. Partly because of my experience in knowing some of the major global health institutes, because of my work, as well as some of the leading universities, I have some linkages with some of them. And ever since April, I've had more hope that a vaccine can be found to have some usefulness sooner than I read and hear virtually every generalist health experienced person say. And some weeks it really concerns me that I actually am being really naive. And when I listen to some of these people saying we still have never developed a vaccine for HIV, for example, and so on, it makes me think I might be naive. But what I also know is if you look at something like Ebola, is when you have something that hits the world's media and our own attention every minute of every day, the speed at which a response can happen, particularly if governments give incentives, I think is bigger than people think. So, and so I put it all together. I currently think it is certainly likely that we will have a vaccine before the end of 21. And I actually think it's quite possible that the leading vaccines, particularly the Oxford one from the UK, which might be, by the way, the only decent thing the UK has done on any of this, it's not impossible that that could be available by the autumn, certainly for people in Britain and for some parts of the rest of the world as well.
Great.
Most people think I'm crazy when I say this, but I've believed it since April.
How much have you seen of a global coordination on healthcare or the COVID-19 versus the global coordination we've seen on the central banks and with regard to fiscal stimulus?
Yeah. Actually, I think this is even though I've probably sounded so far as though I'm a bit of a sort of crazy optimist, this is one of the areas that really concerns me. And if you think about the broad policy response in this crisis in a coordinated way and contrast it to 2008, the difference is staggering. And I think it reflects two or three pretty obvious things that now become apparent, but things I've realized for years, and partly why I made the whole BRICS idea up so many years ago. In that we're in this sort of vacuum where America is losing its relative power, and China, of course, is the rising power of the BRICS, but we're sort of stuck in the middle of not knowing where each is going to go relative to each other, and absolutely. And it means that the whole of the traditional post-World War II global governance system isn't working the way that it used to be. And it was even a struggle at times in 2008, but 12 years later, it's just so difficult. And of course, you see it with the WHO, where the Americans have now said they won't even fund it. You see it with the IMF, where there was a clear proposal, which should have happened, in my view, in April, to boost the SDR funding resource to the IMF, but it didn't happen. Didn't even really get on the agenda. And you see it in so many different areas, and it's very worrying, in my opinion. Second thing as to why it's so concerning is, of course, we're living in a period with such peculiar leaders, frankly, in so many parts of the world, particularly the United States. And I think we have a leader that not only thinks it's popular to oppose all these global institutions, he actually doesn't even understand what a lot of them do. And these things concern me greatly. And I hope we can get through and come out of this crisis with the private sector, especially as it relates to things to do with health in terms of vaccines and other forms of therapeutics, doing everything that they're doing so well to compensate for the lack of policy coordination in official circles.
You touched on BRIC, and BRIC, an acronym that you've invented, Brazil, Russia, India, China.
For the rest of my life, stamped on my forehead.
It's been 2 decades already.
Yeah.
So with the exception of China, Jim, all the other countries are still on the top list of most infections with regards to COVID. What does this tell us in terms of their preparedness, resilience, and when we think of them as an investment destination on a going forward basis?
So interesting, if you go back to the index I touched on before, the one that we had at Goldman, which strangely they stopped publishing many years ago. We used to call it the, let me call it the Growth Environment Score, GES. And I looked at the last index that was published recently, which was 2014. And not only is it the case that North Asia, South Korea, Singapore, Hong Kong, Scandinavia, Denmark, Finland, Norway, Germany, the Netherlands, these are the countries that topped that index and did pretty well in this pandemic. Sorry, New Zealand in there as well. But also, interestingly, within the BRICS, China was the top scoring of the 4 BRIC countries. And in that sense, again, it doesn't really surprise me that China's been better prepared, even though, of course, the infection started there, than some of these other countries. And what it suggests to me, and if you link it to the broad economic path that all these countries have followed over the 19 years now, nearly since I created the acronym, not surprisingly, China is the one of the 4 that has done virtually exactly what we assumed. And in that sense, India is possibly doing better than a growth environment score would say, because India's not far off what we assumed it would have done 19 years ago. And of course, it's true that Brazil and Russia are both pretty disappointing. And in that sense, it would seem to me, and we're talking at a time where the Chinese stock market has just hit its highest level for many years, of course, the past, or actually again this morning. And their own coincidence indicators are showing an interesting sign of an accelerating recovery. The services sector PMI yesterday reached a 10-year high. And these other countries are struggling, particularly Brazil and Russia. And so I think it's tricky. What I would also, let me add 2 other things, importantly, to put them in context, that again, in the spirit of never letting a crisis go to waste, whether this results in a more thoughtful shift in policy thinking in these countries is going to be very interesting to watch. There are some signs of it, in my view, in India. And if you go behind the headlines in Brazil of this very peculiar Trump-like president that Brazil has, they've actually got some sharper economic policy making going on than I've observed for years, with the government trying hard to do what's been obvious that Brazil needed to do for years, and that's to reduce the role of state spending in the economy. And so I find Brazil quite intriguing, particularly because the Brazilian real is so incredibly cheap compared to some kind of notional fair value. But it seems to me clear that, you know, it's not surprising why China is the one that's the star of the BRICS, because each time there's some kind of crisis, China demonstrates it's more robust than the others.
And that leads us to another acronym that you also, the N11, and knowing
Yes.
that China is kind of the big C in the BRIC, do you see a periphery strengthening for the N11 because of that China? And maybe you can give a bit more context of the N11, next 11.
Yeah.
That might be the acronym that we will all remember you for the next 20 years.
I don't think I'm ever going to be able to get rid of the BRIC thing. It will probably be on my tombstone when I finally pass away, if I have a tombstone. But on the next 11, it's a while since I've heard that phrase. But it's on one level, it's sometimes when I reflect back, it's quite funny, as I'm sure you may know, and a number of people on this call. The N11 originally was just a phrase in response to so many important leaders and political figures in other emerging countries saying, "What about me? How come it's just those 4 countries?" I remember the finance minister of Mexico and the then trade minister of Indonesia in particular being very eager to have telephone calls with me to complain that we hadn't considered them. And of course we had. And so what happened is we published this other paper to look at the potential BRIC strength of the next 11 largest populated countries in the emerging world. And in a way, that's all it was. But the whole N11 thing had its own momentum. And as I'm sure some people on this call will know, maybe they even participated in it. GSAM, when I became chairman of the asset management group, actually developed an N11 fund, which I think, if I remember rightly, did actually rather well for a while. But of those countries, it is a very interesting question. And I think there are three categories of those countries that are interesting today. One is the likes of a Vietnam, which are almost definitely one of the major beneficiaries of this desire to reduce the dependency on China as the sole major source of the global supply chain. This is something that's already been happening for a number of years. And I think in the current mood, it will accelerate that. So I think Vietnam, along with a couple of other N11 countries, is probably the clearest example. The second group would be ones which have very strong population dynamics, but have managed to be reasonably robust to the global shocks we've had. And in that regard, I have to say, I find Indonesia surprisingly robust. When we had the various financial problems back in 2008, and then repeated issues going on with the early tamper tapers with the Fed in 2012-13, Indonesia came through that so much better than some of the others. And I'm not quite sure what I can identify about it, but it seems to me Indonesia is possibly 19 years later starting to give me more and more reasons why maybe I should have called it BRIC with another I for Indonesia. I mean, and there's a lot of other countries in that category. Particularly, I'm always intrigued by Nigeria because of its incredibly powerful population dynamics. But of course, as we see, it has if you look at, again, something like a growth environment score, Nigeria scores very, very lowly. And a lot of these countries need to, and this brings me to the third category, they need to look, and some of them you see struggling with this pandemic, look at why the likes of South Korea have managed to be as strong as a European country, and learn how you can improve the governance structure of your countries, improve governance, education, technology. And a lot of these countries still need to do these things, unfortunately, before they become more reliable places to invest, in my view.
So putting that in the context of asset allocation, Jim, and if I'm a long-term investor today, how would you allocate capital in the market?
Oh my goodness me, that is
Thinking long-term. Let's think long-term.
Can we not pretend that the time is finished and the call now has to end? Or I have to answer this question.
That's a question we have to.
Oh dear. I mean, who would have dreamt? I'll give you three, maybe four parts of answering this question. First one of which is, who would have dreamt in 2009 that the next decade was going to be such an incredibly powerful, positive decade for investing in both fixed income and equities? Who would have dreamt that that was the case? I think I'm right in saying it's possibly the best decade, certainly for 70 years, if not ever, for US equities. And of course, it's true for fixed income. And I say that because part of the first point, it's pretty hard to believe that the next decade can be the same. Second thing to say in that regard is, when it comes to the long term, I am a strong believer in never ignoring valuation. It's a hopeless thing to trade with, but if you ignore it when looking at the long term, it's very dangerous. And I think the reality is that long-term return expectations for the decade ahead probably should be lower than what people will have experienced from whatever benchmark-based portfolio they've had for the decade we've finished. And in that regard, it suggests to me that, coming to my third point, and it certainly reflects what I do as an individual, what I'd sort of argue is almost a barbell strategy, which is quite unconventional, where you have and this is something that's probably more suitable to true long-term investors. So wealthy private investors or sovereign wealth funds. It's more difficult for active pension funds and certainly for shorter-term hedge fund types, but they can look after themselves. But for longer-term investors that don't have mark-to-market, I think it's a great environment for still investing in venture capital and startups. You look at some of the things that are so powerful in the world. A lot of these companies didn't even exist at the start of the last decade. And if you invest, as I've experienced myself, in 30 of these things, not all of them will go bust. And if you're lucky, some of them will be very successful. And so I think it's worth taking a significant amount of concentrated true risk. But I would be careful about many conventional equities and bonds. But I think you look for what within the overall geography of the world, those markets that are relatively cheap, and those instruments that are giving better risk-adjusted returns than others. So in that sense, I do think emerging market equities are a lot more attractive today relative to the US market, which I suspect will rally further in the near term, but it's something that I think people should be careful about over the next few years. But emerging markets, more interesting. And within the credit space, and I think this is something that you guys have been doing quite well for your clients, looking at interesting risk-adjusted returns in the credit space is obviously something that I would include in that too. But I think even though cash is giving very low and often slightly negative returns, it is an environment where having a bit of cash might end up feeling better than normally would be the case.
Especially that 10 years is sub 1%. So having
exactly.
Some cash. So the barbell strategy of investing in very specialized areas and for the long term, and having cash or cash-like in the other side of the barbell, that's what you've been doing for yourself, at least.
That's what I've been doing for myself. I've done that for quite a few years in any case. And as we've seen this huge recovery of publicly quoted markets, helped by QE and everything else that policymakers have done, it suggests to me that one should be, for the medium to long term, quite cautious about conventional fixed income government bonds, as well as many public equity markets, especially the US.
Thank you. So just going to remind our friends who are listening to the webinar, there is a chat box. You can ask your question. and Jim is happy to answer this. Following on, Jim, many of clients who are listening today and prospects are running businesses
Yeah.
and day-to-day businesses. What advice would you give them in terms of building stronger businesses today and for the future?
Wow, that's a tough question. Good luck is my strongest advice. This brings me to something that I haven't really talked about yet, but I touched on towards the end of my first question. I observe this as part of my role as being the chair of Chatham House, but you always have to think of the context of a crisis. And this crisis has hit the world, particularly the Western world, when there were increasing questions about the legitimacy of modern capitalism, with many of the winners since 2008 being a very small group of people, with seemingly a lot of people left behind. And that's why it's, in my view, led to the rise of many populist political parties. And as it translates back into business, this, of course, is what's behind the rise of so-called ESG and what I'd call stakeholder capitalism instead of shareholder capitalism. And I increasingly believe that this COVID-19 crisis, whether we get a V or not, is going to lead into an era in which stakeholder capitalism will become the thing to replace shareholder capitalism. And it's going to be more complicated, but it means business owners are going to have to think a lot more carefully about the social and societal legitimacy of the business that they run. And certainly in many Western societies, the almost slight obsessive focus on maximizing profit at the expense of everything else, I think is going to be a very difficult path to pursue with the same vigor as the past 20 to 30 or 40 years even. And I could talk about this a lot more too. I think the whole role of, for example, share buybacks in publicly quoted businesses is going to be a very, very difficult area, which would get worse as looks now quite possibly to be the case if we end up with a Democratic leader of the United States coming after October.
Great. So we received some questions. Let's address them. Your outlook on inflation with the large fiscal stimulus.
Yeah. I don't know. What I do find interesting is that it's important to not dismiss inflation. What is clear to me, in contrast to 2008, this crisis is both a demand shock and a supply shock, whereas 2008 was just a demand shock. And whilst if you look at markets today, they clearly not particularly worry about inflation, but it is quite possible that because of some of the supply shocks, just the role of China in the global supply chain in itself, which has played such a huge role the previous 30 years in having a disinflationary impact for the world, that's kind of gone. And I've already talked about early on the need to spend more on some societal prevention of external shocks, such as health systems. And it might well be that restaurants in general are going to be more expensive going forward because we have to have greater measures to prevent infection, et cetera, et cetera, et cetera. And then, of course, on top of that, we have this staggeringly big fiscal stimulus, which is way bigger than 2008, as well as QE. And so I am mindful that inflation could start to reappear. I'm not trying to suggest I think it is going to, but I think it's more possible than I see many people suggest as being the case.
linking it to another question, the view on precious metals, and maybe you can touch on gold in light of your view on inflation.
Oh my goodness me, gold. I never forget, you know, when I reflect back on my own professional forecasting career, but also when I made personal speculative investments. The I always remember, which I think is perhaps good, the things I got wrong more than the things I got right. And I never forget. I'll give you two things in this regard. One is I remember, it's not what you asked me, but I remember I used to visit Apple in the early days when it was just coming out of its near bankruptcy, near death experience. Soon when I joined Goldman in the 90s, and I happened to visit them just as they were starting with this new shiny gadgets era, and I was so shocked and impressed. I actually bought some Apple stock.
Hopefully,
And
you didn't sell them.
I did, because guess what? The next 12 months, the price didn't move. And I got so bored, I sold them. And sure enough, as in England, rain follows sun, within a month, straight line up. And the same thing happened to me with gold. I only ever once decided to buy some gold, uh, which I did, and nothing happened to the damn thing. And as soon as I got out, in the next 6 months, it trebled in price. So I taught myself never try and pretend that I know where gold's going to go. With that caveat, it seems to me that we're in an environment until central banks start raising interest rates, which if inflation comes back at some point, they will. But until that point, this is a pretty good environment for gold. And I know a lot of technicians have been looking for 1800, which we hit recently, and some are calling that a top and others calling it a correction. I would have thought gold's got more juice in it to go until we see a change in this kind of broad monetary and fiscal policy response that we're seeing around the world. Don't remind me that I said that, though.
But I'm going to remind you of your PhD thesis, which was in
Oh my
oil.
God. Yeah.
So maybe you can take a more educated guess since you've done your PhD thesis on oil. Where are oil prices heading?
I think I said to you guys and your guests at an event in New York many, many years ago, and certainly to, I'm sure, some of your clients at other events and privately. The one thing I learned from doing a PhD in the late 1970s, which I spent 3 years on, never try to forecast oil prices. Forecasting oil prices makes forecasting currencies seem easy. That said, I also used to beat the hell out of the guy that still runs Goldman's oil research, Jeff Curry, that I used to think it was less difficult than he used to make it out all the time. And so, again, going back to what I joked about early on, here, if I would have been a prop trader in the crisis, I would have made money. The day when WTI went negative, an old friend of mine that works in the oil logging business in the Gulf said to me, "Have you seen what's going on? What the hell's going to happen next?" And I said, "Listen, I don't follow this stuff, but I'm pretty sure it's something to do with the technicalities of near-term delivery. And if this is getting it into every email that's coming into my inbox and number one topic on the BBC News, I would close my eyes and buy oil today." And of course, looking at last time I looked at Brent, I'm not even sure where it's trading today, but it certainly has doubled in the period since. My guess is we are probably on our way back in terms of WTI, something in the $60 a barrel area. My guess. But the one thing I will guarantee for you is going to keep going up and down in the future. It will never be stable.
A question on the fiscal stimulus again and impact on global economy, maybe reflecting on the global debt being more than 100% today for the first time in history. So how do you see all of this?
I don't know what to make of the debt thing. Obviously, in principle, it's not a free lunch. And at some point, there's going to be a consequence of all this debt. And it probably will be if inflation starts to pick up again. But I'm also reminded of the hundreds of hedge funds and many others that have tried to short Japanese bonds for the past 25 years. And as I reminded somebody yesterday that I was talking to, I will never forget the famous Stan Druckenmiller once joking to me that he'd lost more money trying to short the Japanese bond market than he'd made collectively in everything else he'd ever made money out of, which obviously cannot be true given how successful Stan has been. But I think before one reaches too stronger conclusions about the price and consequence of so much government debt, everybody should spend a couple of hours reading about what's happened to Japanese bonds the past 20 years again. And I think the answer lies in because of the link to monetary policy, and with that, the link to inflation. And it, as much as I wouldn't dream of personally investing in government bonds of any major country, I would also be careful about shorting them until I believed that there was some sign of inflation, or that we were going to start seeing central banks revising their friendly monetary policies.
Okay. Jim, some perspective of your investment principles that you follow, especially in moments like these.
That's a really good question. Let me say 3 things. First of all, I think it is the case as to how investors react during moments of crisis is usually the thing that will distinguish their performance relative to others. I remember going to a very interesting seminar that the GIC, the government of Singapore, hosted to celebrate 30 years worth of existence. And they very kindly invited me to be on a panel. Actually, they asked me to be on 2 panels amongst all their external managers. I was very fortunate. But why I say it is one of the other panelists presented this extremely interesting piece of research to show that over the long term, generally speaking, investment managers that manage to outperform indices regularly is only because how they performed during crises. And that made so much sense to me. And that's partly why I said some of the things I said earlier. And it's very interesting to me if I look at, it brings me to the second thing. Of course, and what makes markets and investing so much fun as well as so difficult is it's greed and fear. They are very, very strange cousins. And a crisis like this one causes so much staggering fear. And I think it means a lot of people struggle to be objective with such emotion around. And from everything that I've learned from the best investors and minds that I've respected and the way I've made better judgments, as difficult as it is when it comes to investing, even more so than forecasting, you have to look objectively at valuation and the signs that are coming from policy and try to keep all the other noise out of things that might influence your decision. Which takes me finally to the third point is, as I've touched on earlier, especially when it comes to medium to long-term investing, it is really dangerous to ignore valuation. So I'd say those 3 things.
Okay. We have a few minutes left. And before I give you maybe some concluding remarks you would like to give, I'm going to do a little test of yes or no.
Okay.
Either or, not a test. It's either or. Okay.
That's a relief.
So I think a lot of people might have not listened
going into some kind of Zoom quiz where you'd be asking me the capital of various countries.
That's on another webinar. All right, let's start. Bullish or bearish?
Bullish.
Optimistic or pessimistic?
Optimistic.
Vaccine or no vaccine by the summer?
By the summer?
By the end of the year?
Yes, vaccine.
Equity or cash?
Ooh, bit of both.
You're allowed one time like this. S&P up for the year or down for the year?
Small up.
10-year below 1% or above 1%?
Above.
For the year?
I don't even know. What is the yield today?
0.6, 0.7?
Okay, yeah, I'll still say that.
All right. That was an easy test.
Oh, we're
right.
finished. Oh, that's a relief.
We're up. Yeah, done. Jim, any final thoughts? We have people who joined from the US, Europe, and UCC.
Yeah, listen, the final thing I would say, linked to the question before that, you know, strangely, I'm probably a very peculiar human being, I think. My wife, having been stuck indoors with me for 16 weeks, would certainly say that is the case. But, you know, I find this crisis so intellectually challenging and interesting in terms of relating it to what will be a better future policy response on health, and will we learn to never let a crisis go to waste? And I say that because, as some people here would remember when they hear me say it, I actually dreamt up the BRIC acronym during the crisis of 9/11. I actually thought of the idea within 3 weeks of 9/11 happening. I didn't publish the first piece until November. So it was just about 6 weeks later, but I actually thought of it in the immediate weeks after. And that sort of tells me that how individuals or companies or countries can react and learn from a crisis is probably going to be a major influence on how they cope and influence the next era. And that's what I'd like to leave you with for the future that we've got out there, together with as scary and as truly worrying and heartbreaking because of the loss of life this crisis has been. It is true for somebody of my age that we come out of crises. Every crisis you go through often seems like it's the worst crisis there's ever been. And unfortunately, it does seem that each one that comes round is worse than the one before. But we're going to have more in the future. But it's important to try to learn from the one that we're in and adjust your thinking and behavior accordingly so that we can all get on and have a more contented life.
Great. Thank you for this, Jim. Just before we ramp up, I want to remind the audience that we have our colleagues on the July 22nd. We have a webinar with Mark Vernouche. He's the partner of a School of Creative Leadership, and my colleague Adel is going to be moderating. That is on the July 22nd. With this, Jim, thank you very much for your time and for your insights. And I see here a flashing light saying, I forgot one question. Man U or Liverpool?
Listen, I should have said when you were inviting me to do this call that I would only do it if you guaranteed for me that there would be no Liverpool supporters allowed on this call. There is only one answer to that question. Obviously, it is Manchester United.
Awesome. Thank you for your time. Bye now. Bye, everyone. Thank you for attending the webinar. Bye-bye.
Thank you.